Hello, Warriors, TGIF, NFP, ABCDEFG. Hi, Alexander, Peter Morris, nice to meet you. Hi, Hugo, Sinatra, how's everyone doing? Throw your charts away at 5:30 for 10 minutes, shut your platform, then reopen it. Okay, so let's take a look. Good. I'm glad you're doing good. Oh, this is in the way for me. Okay. So, all right, Jays. So, I think the market's fearing a strong number and hoping for a weak number. Forex flow. Are you here, Ryan? You got fans everywhere. Hi, Paul. You've never seen me late? Yeah, I'm the Iron Man. Lou,
I'm sorry, Dale.
Go ahead. No, go ahead.
No, I was going to say, hey, I don't see Ryan yet, but I do see. Oh, Ryan just popped in, but K-Man's here too.
Oh, okay, K-Man. How are you this
morning? Everybody. DJI.
Yeah. Let's see it. We're all here. Let's talk about expectations and markets on the knife's edge. My thoughts are they're hoping for a weak number so that maybe the Fed will, not step on the brakes as hard as fast if they get a weak number. What are you guys thinking? They may not get what they want, but what are you thinking?
The playbook is written for the Fed, no? They started to change in somewhere mid last year. I don't think, unless we get a shocker of a number, of course, or participation rates really drop, or we get an NFP number close to zero. I don't think it's going to change that much to what their plans are. So I don't see too much of a change unless the bar is also high to print now a very good number because the
ADP,
the market will see, the market will see just as a continuation of what's going on. So
okay.
Yeah,
all right.
I think the number today, unless we see big changes in unemployment rate, participation rate, if it's in the range, I think we are just ready to enjoy the weekend.
Well, so hey, K-Man, just really quick, what happens on a good number? I mean, let's say all the data is great. Let's say we beat expectations, that NFP comes in strong. All the other data shows a continued strength in the labor market, and some of the other inflationary data, as far as wages looks strong, continues to be strength. Everything that we continue to see. Do stocks sell off as a result because they feel that the Fed's going to live up to their word, or have we reached like peak Fedness? Have we reached peak Fed optimism as far as hawkishness? What do you think?
Could be on a really good number. I think the yields will continue to be supported. So de facto, they may weigh a little bit on the stocks, but it brings me back to what I've been saying a number of times. A good number is still somewhere good for the economy, right? So are stocks really going to fall out of bed? I doubt it. I'm not suggesting that stocks fall out of bed. I'm suggesting,
does the S&P drop, let's say 50 S&P points because we had good data, or does the S&P rally 50 S&P points because we had good data? That's really what I'm trying. I'm not
I think
here
you could have both. You could have an algo drop
because an algo screw fest
higher, and then you come back. The buy the fucking dippers are going to be there in numbers, I guess. If the number is really good.
I think it all depends of whether or not the Fed bought FANG stocks on this dip.
And so that brings me to. I'm glad you said that. Let me just say for a second. I'm glad you said that because
on Pelosi.
Dale, what?
Or Pelosi's husband.
Yeah.
He's a good trader.
I'm glad that you said that, Ryan, K-Man, because yesterday during the daily roundup, I was, having a discussion with the ForexAnalytix folks, which is for the ForexAnalytix. It's a private webinar we do for those people. We got to be careful of the knee-jerk reaction today. If we get I was more in the camp that what you said, hey, strong data, strong jobs is really good for the U.S. economy. The market might actually get bid up on that, but I think you have to fade. I think you have to fade that. And I also think that if it's bad data, and the market sells off as a result. So let's say we completely miss every data point that comes out today, from on the U.S. job front, and the S&P sells off. You've got to be able to buy risk, because you have to figure that the Fed's gonna, maybe there was peak. We did hit peak hawkishness in the Fed here, and they might pare back their tone a little. And so then you got to be able to buy risk. So I think you have to trade the knee-jerk reaction off of those reactions. That would be my opinion.
Quite agree.
So, Brian,
just one word before I let you guys go. We have the Canadian report out as well. That could be a bigger mover than the US. Yeah, if the US comes out relatively as expected, the Canadian unemployment report is usually a little bit more out of kilter with the expectations. So have a look at that. There's also a few interesting expiries today, which have already been reported. I think between 126.5 and 127. Each of them not major, but take them all together between 126.5, 127. There's a bit going on in dollar Canada on the options expiry front today.
And the dollar CAD has a nice little head and shoulder pattern setting up too. If we do not take out the 128.50 level to the upside, that's a head and shoulder pattern that'll take us back into the lower 120s. So that's something also to keep in mind technically with the dollar CAD. So thanks for bringing that up, K-Man. Appreciate it. Hey, it sounds like Ryan's here. Ryan, do you have any opinions on the jobs report today? Anything that we've just talked about?
Yeah, I mean, the time for talking is done on what the number's going to be. We're in the 11th hour. It's time to plan how you're going to trade it.
Yeah.
And what I look for is, we've had a fairly big event this week with the Fed minutes. What that's done is that set the bar for various pairs. We've got highs at in dollar yen 116, 27s or whatever it is. We've got highs in the bond yields. And it set the lows as well. We know that for dollar yen, for example, 115.50 is the marker right now. So we've got our levels. So what we have to do with this data, outside of the knee-jerk reaction, whatever happens, payrolls have come in at 50K and the market goes, oh, that's crap, but unemployment rate drops to 3.8% and the participation rate goes up and wages go up and it all reverses. So what we have to do is assess the data. Once we've got that assessment, we then look at the price. Has the price broke these levels? If it's good, has it broke the prior level set by what's happened this week? If it can't, then we've got a problem. And then you've got a level to lean against. So if bonds rally, but they can't break through the highs, if dollar yen rallies, but it can't break through that 116, 30 level, let's call it, then you've got to think about what's going on. The market has potentially got to full Fedness as you described it. Same way on the downside. If it's bad, right. Is it game-changingly bad? Is it going to stop the Fed from hiking? Is it going to stop the Fed from tapering? If the answer is no, then you lean on your support level and say, right, well, it's a bad number this time. It's not a game changer. The market isn't going to do a complete 180 on its Fed expectations. So where are my support levels? If I'm looking at buying dollar yen, if I'm looking at selling euro dollar, where are my support levels if the dollar sells off? Euro dollar. If we can't get above 114.20 on a bad number, then again, we're not going to break it on anything. So what are you going to do? You're going to lean against that level, look for a potential short, tight stop if we do break it. And that's all we can do. We can talk about whether the numbers well, I'll tell you now, the number is going to be 777K because that's my number for the competition.
You think so, huh?
I noticed you haven't picked your number yet, Blake.
I did. No, I picked my number this morning.
I thought you were playing a crafty game there.
601.
Because everyone goes the opposite to you. If you go high, they go low, and vice
I did 601 because I was just seeing what you
601.
did first. So and guys, if you haven't voted yet, make sure you use that tweet that here. I'll actually grab the tweet. I'll put a link to the tweet so you guys can win. How many months we giving away?
The person who gets, because for New Year, the person who gets the closest to number will win 2 free months. And the next 2 winners will win a month each.
Oh, nice. Okay, so I'm going to put a link in right here. If you guys are listening in, go to that that I just put it in our chat box. Click on that link. It'll take you to the tweet, and that tweet will then you can just answer to that tweet. By the way, Ryan, a couple people did answer to my tweet this morning. When you're Ryan's the one who's been tallying this up. So just giving you a little heads up there.
Yeah, no
so Dale, what do you think about the jobs? I mean, you meet with so many people every day, and you talk to a lot of people. What's your intelligence gathering? Giving you a sense of looking into the jobs report that we have coming up. And by the way, I'm just gonna say that you can see just anybody who's trading the dollar right now. Yeah. You can just see the tightness, building here. We're getting ready to explode one direction or another. Anyway, go ahead.
Well, as a greeter at Costco, I take a poll.
Hey, folks, how you doing? What do you think about our jobs report tomorrow?
How's your stock report? How's your stock portfolio doing? And anyway, I think a lot of people are, think this is a change of regime, that the Fed put that people have relied on for a long time is much lower. I'm not looking for high in yields till we get to at least a psychological level of 2, but could we pause here? Sure. We don't have to go to 2% in 3 days.
I'm glad you brought yields up. So let's really quick up. My chart of the day yesterday for ForexAnalytix. And if you don't know where to find that, just go to ForexAnalytix.com. Just go to the blog, and as the chart of the day, that
was a great chart.
Well, if it's boons, and you just see okay, we're at support here, and so a lot of people are just trying to figure out, are yields going to continue to go up in the U.S. Whenever I'm trading an asset class, whether it's let's say it's crude, and by the way, I've got a trade going on crude right now. If you're in the ForexAnalytix community here, in our chat rooms, what I'm doing with crude. I said it a little bit earlier this morning when I was talking about the yen pairs this morning. But what if I'm trading crude, I'll look at other crude products too, or things that are correlated to crude, just to see if we're seeing any breakdowns or breakouts in those things. I might look at what Brent's doing, or I might look at the Canadian currency or Norway, to kind of get a gauge of, should I be pressing this trade or not? And when you're talking about yields, a lot of people look at the 10-year, and I do have to say that they are stubbornly strong. And, as far as the 10-year yield, we are breaking higher. And this is a trend line that a lot of people have been looking at. We've had this drawn out here. If you guys have been listening in every month, or every day, excuse me, we've had this trend line drawn here for months, and now people are starting to really look at it too. I saw it on Real Vision. One of the guys over there was referencing the exact same trend line this last 2 days ago. I was like, hey, that looks just like the one that I'm looking at. That means, the market's looking at it. It's not that we're doing anything special here. It's just that when everybody's looking at it, it starts to become even that much more important, because the whole market is really focused on this after 2 years worth of a consolidation. Here we go out in yields, and you can see the 10-year is coming down to really key support. I mean, and let's not ignore the fact that the 10-year bond market is trading at the levels pre-pandemic levels, right? So that's very, very important to understand how close to support it we are. So then if you start looking at the 10-year and you go to Boons and you go, oh, well, this is a level that we haven't seen since 2016, 2019, 2019, 2020, 2021. You realize the importance of these levels. And if they crack or they break, if I see Boons, going tits up, guys, and yields start flying there in Boons, I'm not going to be fading, 10-year yields. I'm just telling you right now. And so that's, what we should be looking at, is just looking at a lot of different, of these prices. So anyway,
that looks a cracking lip for a sell stop.
Yeah. I mean, even if it's just that intraday, you know what I mean? Mm-hmm. Even if you just see a move below there intraday, just whacking stops. I mean, do you really want to stand in front of that? I mean, I don't know, and I'm kind of, I'm in that camp that, maybe people are a little too optimistic about the Fed. Do I think the Fed's going to move on rates? And, and do I think that the Fed's going to, continue to be hawkish? Yeah. And we have to, keep in mind that we still have, how many weeks do we have until the FOMC meeting? What, 2 weeks?
28th, isn't it?
No, it's on the 26th.
26th.
Oh, on the 26th. So we still have,
Hey, can I just add something on those German rates?
Yes, please.
Because you said the Bund is mega important, but then if you look at the yields on the back of it, it's just hanging below the 0%. So I've put that in our chat room yesterday. The German 10-year yield is starting to press against the 0%, and I think it might be in conjunction. Of course, the Bunds and the yields are linked, and it's a big break level, but also psychologically, if the 10-year German yields go back above the 0%, it might have a bit of a psychological impact and just keep euro.
When's the last time it did that?
Right. When's the last time we haven't had a negative yield?
Just curious.
Yeah.
Let me see. I'm
been a while.
putting it up.
I think it poked its nose above it.
It's also 2019.
Okay.
That's
important to note. Thank you very much, K-Man. Now, we haven't heard from Stelios yet.
Hello.
So where you been hiding out? Are you like
I'm just listening to this great commentary.
It's Friday in Athens, and you're like, man,
It's sunny, man.
I'm on vacation already. So what are you guys talking about? Right.
So what do I think about payrolls today? I think that it's going to take a massive one way or another number to change what the Fed are thinking right now. In terms of what they're going to do. But the question is, what does the market, how does the market move? And I was looking at Fed Fund futures this morning, and we are pricing over 3 hikes for this year. Now, I know there are people talking about 6 hikes and stuff like that. I think that's a very tough ask for the Fed to do. Obviously, anything is possible, but and I've been looking at the numbers, right? So theoretically, what should we expect? Well, ADP was strong. Jobless claims have been declining. What else? Employment component of ISM numbers is doing well. So theoretically, this NFP number should be good. The question is, though, what's the market expecting? What does the market really think? And what do I think the risk for a move is? And I think the way the market's priced so much already, yes, the Fed could do more than what the market's pricing, but I find it difficult for the market to actually go ahead and price more, at this stage. So I think the risk is for a bigger move if we have a weak number rather than if we have a strong number. But as I said before, I think it's not going to take one number, even if it's 0 today. Okay, 0 might be extreme, but even if we get 100K instead of 400, I don't think that's really going to change the Fed's rhetoric. Not now, at least. They will want to see a couple of points that are pointing to perhaps a slowdown, but really at the moment, there's nothing to stop them.
What month was it that we had? I want to say it was like 4 or 5 months ago. We had a pretty decent miss, if I'm not mistaken, let me take a look
check. Hold
here.
on, I've got it here.
While you guys are looking, any idea how all the people that are resigning, the great resignation, I think another 4 million quit their jobs last month.
Yeah.
How does that figure into the numbers? I mean, does that make the numbers
Do you
look
mean
better or worse?
Do you mean the quits? The quits
The
in
quits,
the jobs?
yeah. The resignation.
The quits is interesting because it can be used as an indication of people moving up the ladder. So it's not necessarily quitting because they've had enough, but they're quitting a job to get a better job. And as we know, there's a labour shortage. Right. So firms are forced to pay up for staff. If you work in a particular industry and someone offers you, 20% more on your wages, what are you going to do? So that's why I watch the jolts a lot on that quits number, because it is a signal, depending on what sort of market we're in, it is a signal that people are moving up the ladder. So it's a good thing for jobs.
Thank you, bro. Okay.
Like I think September you were looking at. We're expecting 700 something, and it came out at 235 or something like that.
Yeah, was that it? So I mean, well, let's just talk about that for just a second. Was that it? September? Was that the number?
Well, September was a big miss. Yeah.
September was a big miss. Okay, so when you have a big miss, look at us like a couple of months later. Here we are 4 months later. Are we talking about a hawkish Fed or a dovish Fed? Right. So this is to your point, Stelios, is if we have a miss today, is it going to change the trajectory of the Fed and what expectations are?
Not yet.
I think you're going to have to see. Yeah, not yet. You're going to have to see, just some back-to-back bad numbers, like horrible numbers, before people start to scratch their head and say, well, crap, I don't know if the Fed's really going to follow through with whatever they're thinking. So we have to expect that the Fed is going and give them a chance to, prove to us that they are not going to be hawkish. So that's why if we do have a bad number and, if we have a number and you start seeing the market fade, because people are like, the Fed's just not going to live up and they're going to be super dovish. You got to be a little careful with that, because I don't know if the Fed's going to be dovish either. I don't know if that's going to really change anything. But anyway,
think about just one thing. Think about the Fed, the way they had been telling us that, inflation is transitory. They'd been dovish, and now they're switched completely. They can't just go again and say, you know what? Actually, we may not follow through, and this, they can't be seen to backflip from one to the other, from 1 month to the next, right? So they have to kind of give it a little bit more time. Exactly like you said, Blake.
As George Bush Jr. would say.
Just
flip flopper.
Just a quick one on the numbers as you were looking.
The decider. The decider.
we've only beaten expectations 3 times in 2021.
Yeah,
3 times.
3 times. I'm
damn.
Now, and we've also got to watch out for December's, because that can be a really skewy month. Sometimes we get the weather effect and we get the holiday hiring dropping in, dropping out. December 2020. Expectations were for 71k, and it came out minus 140, and that was the last negative number we had. December.
Okay, well, thank you, Ryan. Real quick, let's just talk technicals really fast. So this is the SPOOs, and obviously the SPOOs is in the driver's seat right now. That it doesn't really matter what market you're trading. I mean, you just kind of got to trade around the SPOOs. You got the NASDAQ that's doing its own thing because of yields. It's obviously trading a little heavier. You got the Dow that was just touching all-time highs literally on Monday or Tuesday, and then we reversed hard. We do have a failed rally attempt on a weekly chart in the S&P. That's the thing that I think we all have to pay attention to. Is we broke out last week during a very low liquidity environment today, or we have a bearish engulfing week that is developing. If we closed here, let's just say all arguments aside, disagreements aside, if we close here, we do have a bearish engulfing week, and you got to be very cognizant of that as a trader. Now, I look at what we're developing right now as a pennant. This is a pennant in the S&P, which is a bearish development. That doesn't mean we are going to go down. It's just the odds are tilted towards being a bear. Toward like there's a higher percentage that we're going to break lower than higher. That doesn't mean we can't break higher. I have preferred and always and all week long I've been patiently waiting, and we might get it today. I've been patiently waiting. Whoops, that's not what I wanted to do. A move back to the 618, or excuse me, the 618 retracement, which would be way back up here at 4760 at the kind of breakdown point. But at this point, I would even take a move back to the 50% retracement, which would be 4743. I wouldn't mind laying into some S&P short. So we get that knee-jerk reaction. Like, let's say the S&P moves higher on a bad number, and you go, oh shoot, that was a bad number. I actually want to be short S&Ps. Well, maybe this is the level where you can get short. The flip side is we are holding the 50% retracement of the December low here in, the 20th of December to the high that we posted this week. We're at a 50% retracement, false breakout territory. If we break this 50% retracement that comes in right around the, let's just call it 4670 level. If we get below that, we should trade down to 4650, which is right here. This is kind of where I think we're going to be going, at least today. I'm not in the camp that the S&P is going to trade down to 4550 today or back up to all-time highs. I just don't think today's market is going to give us a huge reaction. I'm thinking that we might see something like this, or we might see something like this. But again, this is where, we talk about, hey, I know we can talk about the number till you turn blue in the face, right, Ryan? But it's really how are you going to trade it?
Yep.
Once the data comes out. And so for me, I'm actually looking to trade because I don't have a position in the S&P. I'm looking to short up here around 4750, and I'm looking to be long down here at 46 and 4650 maybe. And that's it. It's kind of, I think we're in no man's land right now, but there's a higher chance that we do move lower based on technicals. And when you have the dollar really range bound, same type of situation, I don't know if I really want to fade the dollar, while we're above 95.50. It is super, super strong. I cannot tell you the number of people that are calling for a dollar top right now. It's kind of ridiculous, actually.
Are they looking for higher levels first, so Blake, or they think it's already done? I just hear everybody like, oh, the dollar's going to fail up here. That's all I hear. That's all I read is, okay.
just like last year, everybody was a dollar bear, and then we got a bullish reversal. And then I'm reading the exact opposite. Well, I'm reading that people expect the exact opposite this year. And I'm like, I don't know. I don't know if I'm buying on the dollar bearishness yet. I still think we can pull back, but I know, like, technically right now, why would I want to be a bear while you're in a nice bullish uptrend? While you're above this 95.50 level, I don't think there's any reason to be bearish. That doesn't mean the dollar can't go down. I just, I'd rather be a buyer on dips than a seller of rallies, because I think that the Fed still has the ammunition to move. Probably more so than any other central bank out there. But we got about 2 minutes till data. I'm going to take us over to ForexAnalytix. I'm going to open Data Flash. You were going to see live data as this is one of the features that is included with ForexAnalytix. It's nice. It runs about as quick as Bloomberg does. And I ran it next to Bloomberg for, the 5 years that I used Bloomberg just in recent years. And I'm like, yeah, it's just as fast. So it's one of the nice little perks you get with ForexAnalytix. I'm going to pull that aside.
Blake, one more thing I want to say before the number.
We did have Canadian data. Sorry. Go ahead.
Yep. We did have a Eurozone inflation, 5% year on year. Expected 4.7. So this is increasing as well. Even core CPI was a little bit better than expected. And this is probably just going to keep, adding some more fuel towards ECB members start to come up a little bit more hawkish than before. And I've said before, I like the euro for 2022. I'm not saying it's going to go straight up now, but I think it's going to be one of the trades for this year. And the more inflation gets sticky there, the more I think the ECB eventually is going to have to say something at least.
So I think a lot of you guys, I say a lot of you guys because there is a lot of you guys, everybody's bullish the euro right now. That's including you guys. Now Ryan's trying to build that case too. Look, I'm not. I'm not saying that you guys are wrong. I'm just saying it seems like the crowd is very, very bullish euro right now. Anyway, we got 8 seconds. 8 seconds before the data. Here's the dollar. S&P's to the right, and I have 15-minute candles, so we'll be able to kind of gauge what the market is doing here. Woo! S&P down. What? That is
199. 199.
Wow. Okay, so you want to buy?
They wanted a weak number.
Wait, no, I'm sorry. That was the dollar down. S&P went up. See, this is the S&P is. I was looking at oppositely. So the dollar came off a little bit. The S&P is bidding up because people are like, "Oh, the Fed's not going to be able to believe that. They're not going to be able to act."
Yeah.
But how do you feel about this?
That's not a number that's going to move markets, really. I don't think yet. And unemployment. What's unemployment? Has that come out? I don't see it.
Still waiting.
Average hourly earnings a lot better than expected. So that's balancing things a little bit.
Dollar CAD is getting smashed here. So how'd that Canadian data look, guys?
A bit better than expected on the employment change. Employment rate also diving under 6%. Full-time change very good versus the part-time losses, but the balance is very good.
That is a very ugly head and shoulder pattern that I got drawn out there. But you guys can see
US unemployment rate.
Well, so look at the dollar getting smoked here. We're seeing the dollar respond.
Right. Now, again, it's a bad number. It's missed expectations, but the unemployment rate is 3.9%, and the participation rate has gone up again. Wages have gone up. This isn't a bad number.
Yeah. So you know what? Yeah. Look at the reversal that we're seeing in the S&P. Everybody's like, "Oh, wait a second. Hey, that was now look at the S&P reversing." And so you got to be a little careful here, guys. This is the knee-jerk reactions we talk about, where you get suckered in, and you go, wait a second, and that isn't a bad number. Are they gonna really change? Is the Fed really going to change course here? And what the FX market's telling us is no, probably not. And you can see it really in the euro. Now, obviously, the Canadian's got its own thing going on because of the Canadian data, but euro spiked up, knee-jerk reaction. It's come right back down. S&P, very similar. We've seen this. Whoops, here, let it go over here to the right here. The S&P that spiked up. Now we're coming back down, and we start breaking through 46.70 in the SPOOs, and you're going to have a lot of people that are bummed out that we didn't get upside follow through. So anyway, I think it's something we do keep an eye on, but I don't want to take away from. Wait, so what was the data? 199.
Yep.
So whoever voted against me, winner, chicken dinner. I'm telling you, I'm like one of the worst NFP guessers on the face of the planet. I'm self-proclaimed too. So if I say 601, you should be on the opposite side of that, almost to a T. Expectations were at 400. I bet 201 over the expectations. We came in 201 below expectations. That would be the exact opposite. Oh my goodness.
You're like George Costanza.
I'm like George Costanza on NFP guesses. That's hilarious. Wow. But I've told you guys that for years. No one seems to believe me, but
it doesn't matter, Blake. You make money in the markets. Who cares? If you can't
That's right.
Guess
hey,
an NFT number.
Look, I don't give I could really give a rat's ass about NFT. That's how I trade it. That's all that matters. Hey, guys, I want to say, come to the family here. Do you want to kind of see what's happening? And this is in our chat rooms, as you can see the data going off. This is just our general chat room. Then you got like the trades room. Then you got the more macro Forex flow room. Then you got the news and research room. We even have a Spanish chat room for Spanish traders out there. So guys, if you didn't win, jump in. It's $1 for 10 days. Try it out. And plus we have our special pricing that we do once a year that's coming out this weekend. So we'll see you at ForexAnalytix. We'll see you in the chat rooms. It's a really, it's a great community. We've been building it for years and years and years. So we'll see you there. And Dale, have a great interview with Mish. I love Mish to death. She's so awesome.
One of
so
the
you
best
guys should stick around and listen to her. She's great at breaking down all the markets. And I want to say TGIF to everybody out there. Stelios, I know Steve was listening in. Steve, Ryan, K-Man, Ryan, K-Man, Stelios, Steve, Ryan, K-Man, Stelios, Steve. Did I get everybody? And you too, Dale. Have a great weekend, everyone.
All right.
Cheers,
Drink
guys.
decaf.
Yeah.
Thank you.
Decaf now, Blake. All right. Mish, gosh, what a great person to have here with all the conflicting moves that are going on and a different regime. I've been looking forward to speaking to one of the best intermarket relationship analysts I know. How are you, Mish?
Good morning, Dale. Thank you.
Good morning. So I'm wondering how the dysfunctional family is behaving in the last few weeks since the Fed changed their regime for now. If you want
It
to
seemed like the family
share your
kinda-
screen.
Sure. Let me get my.
Okay.
Okay, hold on. Let's get to.
Everyone okay? Keith good? Everything's okay?
Everybody's good. Yeah.
All
It's
right.
just, it's trying to figure out what the heck's going on. All right. Let me just get to the right screen here. And now I have to go back to you and share screen. Yeah. Okay. That should work.
Is that the topic you'd like to cover, Mish?
Well, I
The
think
family?
I think it's always a good place to start
Okay.
because after all, what's the markets without the family? The family really pretty much tells us everything we need to know. And then its outlier relationships really put the icing on the cake. And so there's been a couple of very interesting things, and I think very typical of what we're seeing all around. So here's the 6 of them without cryptocurrency was having its own issues, although it's coming back a little bit off the lows. I've added crypto as my 7th member of the family. But let's
What do you
go.
call it?
Crypto.
Just crypto, okay.
Yeah, I haven't come up with an actual.
Is it like a cousin or a black sheep of the family or anything like that?
I'm still working on that. It's more like here's the thing. There was a horror movie that was made years ago called You're Next, which is it's tongue in cheek. And
I'm scared. My hair just turned gray.
it's an intro. I love it because I happen to like those kind of movies. But
Yeah.
the reason why I'm thinking about this movie, and it's kind of a little funny way to start the session today, is that a family gets together for, I think it's Thanksgiving or what have you, and they're all together. And of course, there's all kinds of interfighting in the family and all drama going on. And all of a sudden, an arrow comes through the window and kills one of the people in the family. So they're now under siege. And the rest of the movie, besides trying to protect themselves from getting killed by more of these, it's really a crossbow, a masked person. Besides the fact that they're trying to figure out how to save themselves, it's also who is doing this, right?
Okay.
And in my fantasy of the movie, the family is the modern family that's under siege, and each one of them is trying to decide why they're the ones that should be saved. In the meanwhile, they're trying to figure out who the one is actually shooting from the crossbow, and crypto is the one that actually saves the day and survives. In my version, right?
Nice.
So I haven't quite figured out what the actual words or label is for that. So if anybody comes up with something, I'd be thrilled to get some.
Well, in the movie, I don't want to go right to the end of the movie, but I am curious how crypto saves the day in your movie.
Well, it turns out that crypto is the only one that survives and figures out who the killer was.
Okay. All right, interesting.
Right.
So, okay. So, I mean, it does, we are headed that way, right?
Yeah. And I don't know who's the killer, the government,
Yeah.
the Fed.
Yeah.
But
maybe multiple China.
China. Well, yeah, right. So far that's been relatively muted, but actually that's one of the things we should talk about today is China, because it's been all over the news this week that Charlie Munger bought tons and tons and tons of Alibaba, and China has done nothing but crash even when our market was going to new highs. So we can get to that, but let's not get too scattered, which I can easily do. And let's focus it on. So I really, to me, one of the most interesting charts is the IWM chart. So, because I think this kind of tells the whole story right here. If you look back from basically from February of 2021 to now, we've been range bound, except for that one little blip up that we had right here. So This 207 level, we'll call it 205 to 207. It's hard to be exact, has been the bottom of the range. And this 234, 235, 233, give it a little bit of room, has been the top of the range.
Do you think a lot of people that embrace that breakout that failed are stuck?
I think they probably got a little bit hammered in there. Absolutely. Because this was a pretty decent sell-off from the peak here.
Yeah.
It went down about 10, 15%.
Well, yeah, people were waiting 8 months for a breakout. They went with that candle, and 2 days later, we're back at major support.
Right.
That would catch a lot of people by surprise, I think.
Yeah, and we'll take a look at the NASDAQ, which is also very range bound. Obviously not clearly as long as we're seeing here in IWM. But
so is this a bearish sign, Mish? Is that what you're kind of getting at?
This is where the outliers come in. Right now, if I had to make a bet on which way, I would say, I don't like to use the word bearish because I don't say I'm bearish. I think that we're going to find a range bound market for the entire year.
You're a trader.
Yeah. And the range bound market is probably in some ways easy because if you understand the support, when you're going to buy a dip, you're going to buy against that support, but you're not going to sit in a position for a long time. And I'm saying not for every single instrument, but at least in this situation, you're not going to sit. You're going to want to get in and out quick, right? Because you're buying on the support. And that means you have to sell as it gets closer to the resistance. So in this case, though, I'm going to say more to the negative only because of the fact that this 50-week moving average, I'm sorry, all these emails coming in, the 50-week moving average is actually below.
Right.
And we are a smack dab in the middle of the range. And that explains why people are talking about how choppy conditions are. And unless you're in the few instruments that have really been trending, like consumer staples and energy,
banks,
some of the commodities, the rest of the market's been really hard to trade. So this is a really good time to kind of step aside a little bit. I mean, and just looking at this picture, it sort of gives you the whole thing. And I'm not talking about if you're a day trader. I'm talking about if you're really based.
If you're an investor.
If you're an investor and you want to figure out how to position your portfolio for 2022, right now it's mixed. It's very, very mixed. And that will resolve whether it's breaking down under 205 and then we see a move down to 180 or whether we get back over the 230, 234. And, I don't want to say that's impossible. And now all of a sudden, the industrial manufacturing side of the U.S. economy does well. We got earnings season coming up. We have what I like to look at as a January calendar range, which gets set at the end of next week. So you take the first 2 weeks or the first 10 days, really, of the month of January. And that range becomes good for 6 months. So that's a really good way to see what's going to outperform versus what's going to underperform. So I'm kind of waiting here. I mean, I have more commodities on than anything else.
Okay, so you're a believer in the way you do it is, the expression as goes January or the beginning of January. People used to have calendar days that represented a week or a month based on the first week or two. Is that what you're talking about doing? Or you establish the range and then if we take out the high of the range, that means something, and the bottom of the next 2 week range means something?
Well, there's a 1 month calendar range that a lot of people use where it resets every month, but the January and then again in July is really great. I can show you. Let me show you an example.
It's like a 6 month range. Then.
Yeah, let me show you an example so you can see what I'm talking about here. We were looking at Alibaba. So if you look at Alibaba and I blow this up here, this red line is actually the 6 month calendar range low. And this one was the 6 month, and this was reset in July. The green one is the high. So here's a perfect example is in July, it made its high, couldn't get through it, made its low, broke down. And you can see that really followed a good trend. I wouldn't pay any attention to those lines now because we're going to get a new range for January. And
that's played out.
Yeah. Now that doesn't mean it's perfect. It's not perfect.
What is?
Exactly. You're perfect.
Thank you.
Yeah, you're welcome.
I thought only God saw me that way, but that's great. I'm perfect with all my imperfections.
Exactly.
And all of us are. So, why don't we switch to, I know you talked about most of your positions are commodities because, I really want your view on, what's happening in precious metals. Although I know there are performers, the grains look great, and you'll probably have some exotics that you're positioned on. You called the bottom in sugar a few years ago. Do you think that we're getting close to an entry point on the long side in gold? Maybe above 1,700, and silver maybe in the $20 range?
Okay, so before I answer that question, I just want to point out two more things about the macro because it's so important.
See, I'm the scattered one.
Yeah, no, and it's okay. And by the way, I definitely want to talk about what you just asked me because people have been saying inflation has peaked because of the Fed action, and they don't understand. I mean, it's a rate of change. We're starting at a 0% interest rate, and maybe by the end of the year we'll go to 0.5 to 0.75%, and yet the rate of change of inflation has put it close to 9%. I mean, I don't understand why people think that that's going to put the brakes on inflation, especially since we still have an Omicron situation. We still have a lot of lockdown globally, and we still have even people in the United States staying home. Demand is still low while supplies still remain tight. There's going to be another surge. That's my prediction. Okay. But anyway, we'll get to that in 1 second. I just want to point out one other thing. It's really important. The top half here, which is the retail sector, very important, consumers, the Russells, which we just looked at, and biotechnology, which could be both a cyclical and a non-cyclical, have really broke down into caution phases. They were all under their 50-day moving average. While you look here at the regional banks, went actually to new all-time highs yesterday.
Right.
Transportation, that's the surprise, has really tried here to look like it's possible to break out. If transportation can get over, IYT can get over like 280, 282, especially on a weekly closing basis, it would be really hard to be negative because that's showing robust demand.
Right. That's an ascending triangle.
Exactly. And you got to just then turn your focus in terms of investments into what things are strong rather than trying to buy the beat up weak stuff. And then semiconductors is still in the game. It's floundering here a little bit near the highs, but it's still near the highs. And I've been reading a lot of positive stuff about chip makers like Samsung and Intel and stuff like that. NVIDIA, which is now down, but pre-market, but still semiconductors are still in a pocket of strength. So you have a divided family, and that's really important to note because that's not the perfect time to start loading up on swing positions, number one, in terms of the actual equities. And number two, it tells you at some point, one of the half of the group is going to be right. Either IWM, IBB, and XRT are going to say, wait, things aren't so bad and rally, or the banks, the transportation sector, and even the semiconductors are going to go, looks like this economy is really slowing down in spite of the fact that the Omicron, and we could have some kind of a surge come back. Where are we going from there? And then everything can tank. And we're in the middle. So if people telling you that they know, they don't. How can they? Even the family is a little confused right here. And then the last chart I want to show you is really so important. And then we could talk about commodities. And I'm sorry, but I just think.
No, that was great. And, I hadn't looked at transports for a while. So, I love doing these interviews because, to me, that kind of changed the narrative for me a little bit with that ascending triangle in transports. I think that's very important.
Right. The other thing.
Thank you for sharing that.
My pleasure. So the other thing, the other thing to really watch is bonds, and particularly not necessarily the long bonds, although what's really interesting to me about long bonds is that typically they're the safety play.
Not lately.
I've been saying this for like a year and a half now. Is like, what's going to be safe? Is the dollar going to be safe? Maybe not. Are the long bonds going to be safe? Maybe not. What's safe? And that will be a great segue to our potential talk about gold, but let's go
Okay.
here about junk, because this is the ultimate risk on. Okay, so people who don't understand, the HYG is another symbol that you can use, but people don't understand why the relevance of junk bonds is junk high yield. They pay high yields on companies that are basically junk. And so when they were in a risk on environment, you see bond traders going in and buying junk bonds. And you can see that throughout this whole move that we've had in 2021, starting really basically in June, July, after the big thing. And this, by the way, is, yeah. So starting here, actually in 2020, after the worst of the pandemic was over, junk was not only the first thing to go down, by the way. I mean, junk really told you here in the beginning of 2020 that here's that 6-month calendar range. It told you it couldn't get through it. Yeah, right. And then look how tight the range was. It broke down in February under that 6-month calendar range.
The simplest things are the most powerful things, aren't they?
Always.
Yeah. I mean, be Forrest Gump in this business.
Absolutely. And so
stop
here
complicating
you were.
everything.
Here was your box of chocolates right here. This told me to get defensive, and this thing crashed. And since that whole nadir, and now that it's back over, it got back over in the summer, and then throughout 2021, if we start 2021, we had dips and ebbs and flows. That's normal, but really we stayed strong until October. We started to break down.
Yeah.
And now here we are. We had one little teeny blip in November when we had that little brief rally.
Yeah.
But it didn't last very long, which is why you can't say a rally in a day is a rally. You have to really look over the course of a few days. And this is where FOMO, people get chopped up to smithereens. And now look at us. We did hold here at the end of November into December, and we rallied with the Santa rally, but we never got over the 200-day moving average.
Why were investment grade corporates LQD weaker than junk up until the last few days?
Because that's high corporate bonds, and corporate bonds are basically dealing with a lot of the big companies like Apple and Nvidia and Microsoft and things like that, and they have come off.
Okay,
all right. They've
more fear in the. I believe that's the biggest bubble. I think it's with financial engineering, the corporate bond market, I think it's bigger than junk now.
I think you got to watch both, and I think that's an excellent point that you make. Yeah, but I like to look at this in particular. Maybe it's just because I like to say the word junk, but right now we're we haven't opened yet, but you can see. We're down here. And if we take a look at a longer term view, well, let's take a look at the monthly chart, because I don't usually show that. In the monthly chart, this is why I say range bound. If this thing continues to break under this 80-month moving average, it'll go down, which will bring the market down. But do I think we're going into a major bear market? I mean, look where this was in 2008, 2009. I don't think we'll get down that far. But I do think that if we look back at 2018 and that level, and even where we started to pop from in 2020, we could get down to around 98, 97. And if that's the case, that's going to be a nasty spill for the market. But that could also, that could also be a good buy opportunity for lots of things. So that's my prediction. We're range bound until these ranges break, but then we could have a good sell off, but it's not like the start of a major bear market. We're not going into a major recession. I don't see that at all.
Okay.
All right. Now let's go to your favorite topic. Well, right now, what's 167.21 bid. So gold. Oh God, gold is so freaking frustrating. But it depends on.
Everyone's saying that, Michelle, and that's why I'm interested. And it's not because of price damage. It's because it's done nothing. There's a difference between liking something that's been creamed and people not liking something just because it didn't trade to their expectations.
Correct. And so here's the thing about gold is if you look at it on a daily basis, it's, talk about the ultimate chop, 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 chop. Here it is. But again, this is a situation, and here's my inflation conversation right here. Gold so far has been, except for this one great rally, which we caught. In 2020, the first place I went to after the whole mess was over and all the stimulus money was starting to come in, because I was like, yay, inflation, it's coming. Not yay, like, because I know it really hurts people, but yay in terms of trading. And I started buying gold and silver, and I did amazing in that. And since then, I've caught little pops here and there, but I've also had a couple of areas of getting totally chopped up. I'm long gold, full disclosure here, not long silver. I was long silver, made money there. Haven't touched the miners because it seems like no matter what I do, I can't make money in the miners right now. So I've stayed away. But gold, here's my feeling. Right now, it's a buy weakness, sell strength market. It's been a buy weakness. Every bear comes out of the woodwork down here, the market goes up. Every bull comes out of the woodwork here, the market goes down. So essentially what that tells me is when that changes, when that narrative changes, when you get to a point where it starts to go up and the volume goes up and you start to see people buying on strength as opposed to selling into the strength, that's not only going to be the sign that gold can go much higher, it's going to be the sign that commodities and inflation is way more out of control than people feared, that the Fed, regardless of their good intention, were way too late to the party, and going from 0 to possibly 0.5% interest rate is a joke. Then that's when gold can really fly, and that's kind of what I'm looking at. And plus, again, if we look at a longer term chart, you have a really nice kind of I want to call it an inverted head and shoulders because it's not as clean, but you
Maybe
definitely,
that's the handle of a cup.
exactly. It could be a cup and handle. And I've seen some chartists who are looking at that sort of thing, but you can certainly see now if we can get through 180 in gold, and especially on good volume and hold, we could see a really kind of huge move up. So I have a probe position on. I have a stop. I mean, it breaks down under 166. I'm going to be like, okay, there again, little chopped up, take my small loss and keep watching. But at this point now, I'm more encouraged that if it holds this 166 level and we can start moving back up, maybe even next week, and get some kind of a calendar range, that I would be looking at gold as a potential buy, and gold more than silver, by the way. Even though in an inflationary time, silver tends to outperform gold, relationships change. Gold will have two reasons. One is because it's been so undervalued, so ignored, so you could see people running in. Two is where people were convinced that cryptocurrency was the inflation hedge. They can switch that attitude to gold. And three is we really do have some geopolitical crap going on right now that we can't ignore. Russia being the main thing, and oil. And if oil continues to rocket, which I think it will, I am long oil through USO right now, just because it's the easiest thing to get my.
A lot of people have that as their best trade for 2022.
I don't know if I'd say this is my best trade for 2022, but it's a darn good one, because if oil goes through $85 a barrel, I think you can see $100 a barrel pretty quickly, and particularly if things continue to heat up with Ukraine. And then OPEC just basically showed their hand. They're like, we're not raising production anymore. We still think everything is fine. They want prices to go up. Why not? So
China doesn't.
China doesn't, US doesn't, but yet look at what US's attempt was to try to control. I mean, what did they release? It was terrible. Yeah, it was political.
Jimmy Biden went to the Strategic Petroleum Reserve.
Yeah, as a political gesture.
Yeah.
Yeah, and so, I don't even like to go to the political realm because I think you can get into trouble. So that's it. That's it.
All right.
Now, as far as the grains, this is why a lot of people are saying inflation has peaked, because the grains have come off. Here's DBA. But again, people look so myopically.
Yeah, they're looking at an hourly chart, so they're bearish.
All right. Oh, it's down from the highs. It's peaked. But look at this. This is an 80-month moving average. This is one of my favorite things to look at. If you can extend this back, you could see that really from 2011, 2012, grains were in a downtrend that started to reverse after the pandemic into 2021, cleared this 80-month moving average for the first time in 10 years. So
Yes.
that tells me that we have just started to get
Embryonic.
going. Yeah, exactly. Embryonic. Good word.
Yeah.
And so that's kind of my major thoughts is range bound until we break these ranges. Watch those junk bonds because they could really be a key. But don't think the world is coming to an end, because that would give opportunity in certain things. And in the meanwhile, watch these commodities, particularly this gold. If it doesn't break down under 166 and holds, could be a good opportunity. And think about companies that can not only pass pricing power to customers, but companies that are going to sell things that people need regardless. And even something like medical devices, because all those elective procedures and things that weren't necessary to get done during COVID time
Interesting.
is going to come back. People are at some point are going to be able to go back and get the normal things that they need done. And that could be a real boost for some of the medical supply companies as well.
What do you like better, fertilizer or gold?
Let's see. Shit.
Anyway, China's not shipping fertilizer. Well, I think the theme for 2022 is we went from just-in-time inventory to out-of-time inventory to out of products and out of favor with what used to be reliable suppliers.
Mm-hmm. Well,
I think that's a big picture.
Yeah.
We've had so much of everything for decades, and we're oversupplied of everything, and things were cheap. I think there was a paradigm shift that's happening and we're not going to go back to 2019 how things were, and I think shortages, are part of it. And I like grains, especially, Michelle, because I don't care what the Fed does with rates. It doesn't print corn or beans, and it doesn't take them down either.
And Mother Nature has been on a tear and looking like she ain't going to stop anytime soon, with predictions of more floods and fires and tornadoes and things like that. Drought, which we're having so seriously here in the Southwest. So, So last glimpse here is I wanted to talk about China, because you mentioned China.
Okay.
Again, these charts are uninteresting to me. This chart is interesting to me. This is the monthly chart. So first of all, forget about all these Bollinger Band things, except for this red one we're going to talk about.
Channel.
This is a beautiful channel. And if this channel goes back to 2008, and really you could kind of extend it probably even to 2005. And so every time we've touched the bottom of this channel, we've had a really significant rally. Of course, we have some triple tops up here that we've seen, and that's one of the reasons why we've fallen off. But we not only are near the bottom of the channel here, this is a Bollinger Band that I like to look at. It's almost like a mean reversion type Bollinger Band, in that when it breaks and comes back through, it's significant. Now, in this case, it touched. It never really broke. But what I'm looking at, and you could see that China's actually bid up right now. It's up 1.45%. If we get a close over the low of, or the close of last month, which is 36.58, so I'm calling it about 36.60, this could mean that the relationships in the markets on China so underperforming the SPY could change a little bit as well. And so, and maybe that's one of the reasons why Munger is so hot on Alibaba, but I like to look at the ETF. So this is something we're not in at this point, but we're looking at, and I think your risk is clear. If your risk would be really basically, you give it a little, if you really want to give it room, you give it room to around 34. If you want to play it tighter, all you have to do is give it to the low.
It's at an inflection point. It's good or bad from right around here.
Yeah, you're wrong under 35. And if you get it right, you could probably get a move up to about 40, 41. And then you reevaluate.
You're the best, Michelle. Show your website.
Okay, let's see here. My website. Oh.
And you can follow Michelle on Twitter at Market Minute. Great content on Twitter. And, Michelle's so sharp.
All right. Thank you. All right. I don't know. For some reason, you're getting
Okay.
Oh, by the way, my report, this is why this is here. 2022 trends, themes, and trades to watch. I give you a lot of information. I talk about China. I talk about the year of the tiger coming up. I give you 20 of my top picks, everything we've talked about in detail. You can get it if you just click here. It's free.
Okay.
All
Wow.
right.
Nice
So,
offer.
yeah. So there you go. That would be my parting words, is go pick that up, and it's a good weekend read.
Have a great 2022, Michelle.
I'm sure I'll
I'm
see you again.
we'll set something up. I'm a fan, always rooting for you and Keith, and hope you have a wonderful 2022, and that all your pips are green. And
You.
really appreciate you being here with us. And it's great to laugh and learn at the same time. You and I could do that.
Yes, we can. Oh, that's
All
what it's
right.
all about. Never take anything too seriously.
All right,
Except,
Michelle.
all right.
Except what? Except
your
what?
health. Your health.
You're right. Okay.
Yeah. Okay.
Thank you, Michelle.
All right.
Everyone.
Bye-bye. Thank you,
Michelle
guys.
Schneider at Market Minute. Check her out. She's definitely part of my intelligence gathering. So I'll talk to you guys later. You could join the team on the Morning Edge in 10 minutes. You're welcome. People are thanking you, Michelle.
Thank you.
And everyone have a great weekend. Remember, don't just count your grains or your transport indexes, anything. Count your blessings and tell the people you love, vocalize it. They're not mind readers. And have a great weekend. Look at your monthly charts and consider being part of some community. Okay. It's important to surround yourself with like-minded people. Adios. And Steve Volge, I hope you and your family are feeling better. Look forward to hearing you Monday. That's an order. Adios.